Welcome back. You're still tuned in to Trading Hour on CNBC-TV18, where the REIT IPO of Property Share Investment Trust, India's first registered small and medium real estate investment trust, has opened for subscription today. The issue will be available for bidding till December 4th. Hashim Khan, the co-founder and director of Property Share, joins us now to take a few questions. Mr. Khan, good morning. Thank you so much for joining in. Well, can you explain the structure here? Give us a sense of the structure. How many projects do you have under the trust? Is it just one project that you will be acquiring right now? Do you have plans of acquiring more projects? How would it work?
Good morning. Thank you for having me on the show. This is a new regulation that SEBI came out in March this year, which is the SMREIT regulations, a new chapter under the REIT regulations. The way it will be structured is that there is a trust which has the license for the SMREIT. That trust can launch multiple schemes. Each scheme has to be between 50 to 500 crores, and the scheme will then go and acquire properties from the market. Unlike REITs, where the minimum issue size has to be more than 500 crores, the 4 REITs that are currently trading in the Indian markets are more than 300 crores, 3,000 crores issue size. These are smaller concentrated bets with one or a few properties under each scheme. The trust will launch multiple schemes. PropShare Platina, the scheme that is currently open for subscription, is the first scheme launched by the trust, which is the first license that SEBI gave under the SMREIT license.
Okay, so this will be just one property or one building that you will be acquiring under this REIT, and going forward there could be plans of acquiring more. So this one under different scheme, but under the same name.
353 crores. The maximum size of any scheme under SMREITs has to be 500 crores. So new scheme will have another property.
Okay, new scheme will have another property. Got that. So under this property, I just wanted to confirm you already bought it in November, right?
No, we proposed to buy it.
Okay, you propose to buy that, and this will be via the funds that you'll raise in this IPO.
Yes.
So what would the annuity look like? Because you've not bought it yet. What are the financials that you are guiding for going forward? And what will the yield look like on this particular property?
So the first year's yield would be 9% pre-tax and 8.2% post-tax. Second year, it would be 8.7% pre-tax, and third year, it would be 8.6%. It drops a little because our fees for the second year is 0.2% and third year is 0.3%.
So on what basis are these projections made, Mr. Khan? Are you already in touch? Does this building already have some clients? What is the clientage looking like? What is the industry that they're coming from? This is built by Prestige, I believe. So is it already occupied, or you still have to sign some agreements with some of the lessors?
It is already occupied, but once we acquire the building, we will sign the lease with the tenant in our name. The building is occupied by a US-based IT company with 15,000 plus employees. The building is on Outer Ring Road, Bangalore, which is the biggest office market in Bangalore, built by the Prestige Group, one of the largest developers in India. The building itself is within a big multinational tenanted park with tenants like JP Morgan, Adobe, Oracle, etc. And a lot of the buildings within the park are institutionally owned.
Okay. So, you know, in FY28, you're expecting an increase in your net operating income. Can you give us a sense of what would lead to this, and what would the typical EBITDA margins be in a small REIT versus the other REITs that are already listed, the larger REITs, that is?
Yeah, so the rents typically in commercial leases increase either every year or every 3 years. In this case, after 3 years, the rent would go to 107 rupees from 103. And after 6 years, it would be 123 rupees. So these are inflation linked. The rent increases and therefore the distribution also increases. Typically, the way investors should evaluate this is the distribution yield. If they invest 100 rupees, they should expect to get 9 rupees every year as distribution income. Pre-tax, post-tax, it would be 8.2.
Okay. All right, Mr. Khan, thank you so much for joining in and explaining us the structure and how you would go about this REIT. And this is first of a kind, so it will be interesting to see the traction and the response as well. That's the word coming in from the REIT. This is Property Share REIT IPO, which opens for subscription today. Time for a short break now. We'll get you more on the markets on the other side. Stay tuned for that.
A very happy birthday to the entire team at CNBC-TV18. Congratulations. Well, I've had many fond memories of Shireen and others talking to me during the pandemic and having a very close discussion on how we, brought India back out of the pandemic much faster than most other countries in terms of economic recovery, in terms of protecting, all our citizens. And of course, some of the fond memories when I received the Business Leader Award from you 2 years ago. That was a very nice, cherished moment for me. So these are some of the memories.